All right, so if you have like a particular question or something, you can just ask it um, in this chat box on the voice channel. But I want to show something. I want to show exactly why we stopped where we stopped. So if you just take a look at this downtrend on the cues, we were in this really easily defined downtrend, and so I'm gonna copy and paste this over and over again. So we're in the, God damn it. So we're in this downtrend over and over again. We rejected, and then we finally broke out of it here. So let's do one more and make it a different color. So we break out here. It's red, so you can see that it's a breakout. And then ultimately, we just kind of slosh around, between that breakout point and then between there and prior, inflection point, support, etc. And then we roll over. But if you pay attention, let me drag this back down. We rolled over right back to a retest of this downtrend that we broke out of. So it's about as like technical of a retest as you're gonna get, um, and essentially it's just bouncing off the trend and then it's wedged between the trend and the 5 hour. So if I overlay, where is it? I think it's this one. If I overlay, yeah, if I overlay the 5 minute, once buyers stepped in here and tried to find some sort of support to buy against, the longer that it sits around and just kind of goes sideways, the more tension it can create and the more stocks that people can start picking from. So if I go to like Tesla, for example, Tesla just kind of came down to, there's a volume shelf here at 683, give or take, and it basically just came down to this support level, and it gave buyers a floor to buy against. So more often than not, you're not going to get a better entry on Tesla than like $3 of downside risk if you're trading it with leverage or anything. And essentially, that's what it gave buyers for the last couple hours. Now, the problem becomes that it now wedges between the support level and resistance. And what you're going to see is a lot of these names across the board are going to do the same. So if I go to Amazon, I can find very clear line in the sand at like 109 if I go on the daily. But you can call it like 109 and change. And the longer it sits around at this 109 level, it'll find some people that'll come in and take some shots. The problem becomes same issue. You have this falling 5 hour, which is a momentum based moving average. And essentially, the longer it just kind of sits at this level, it lets this momentum moving average kind of catch up. And then it becomes make or break. Either buyers really step in or they don't. So if I go back to that QQQ 5 minute, which I just showed, but I'm going to show it to you again, give you an update. It gets to a point where it has to hold, and essentially gets to a point where it fails almost precisely on that 5 hour, right? So you can have ranges to scalp. So you can have 288.50 to 291.50. So you can get a $3 range if that's your MO or that's your style. But until this level, until this 5 hour, which is where it broke down initially, excuse me, you see it. It's rejecting. Finally, it breaks down, and then you've got a cascade. Until that's reclaimed, and it's got to like actually be reclaimed. Sometimes you'll get these moments where it'll reclaim for a minute, and then it'll just give it up. But until that gets reclaimed, you're gonna find situations where people are gonna try to pick bottoms, and in this case, again, they're picking a bottom. Let's make it clean. Actually, let's just remove everything and make it as clean as possible, so you guys can see it a little bit more cleanly. You're gonna get people that are gonna try to pick bottoms against these levels, right? And so you get this downtrend, and then you get a breakout of this downtrend, and then you get a retest here. And so until you get a 5 hour breakout and one that actually holds, you're going to find yourself in a situation where people are going to pick bottoms or they're going to try to trade against levels. So whether it be trying to trade against this 5 minute mid, which essentially is like 289.70, give or take. So they're either going to try to trade against these levels on a short term basis, or they're going to try to find fades against the longer term basis. So I'm a fan personally of continuing to fade into resistance until it proves to you that that's no longer the case. And the reason that I'm a fan of that is because you can go through it across the board. So I can go through Google, for example, on a daily, and you got a 20-day resistance above, and then on an hourly basis, you've got 5 hour and that breakdown point as resistance, right? So you get these multiple spots that kind of like line up, where on both a daily and an hourly time frame, which are larger time frames, people kind of are like, okay, I've been made whole. Let me get out. It's not to say that it can't like reclaim it and then create a volume gap until you get to the 20-day or until you get to this 100 hour. But until that proves out, I don't like to get ahead of it personally, unless if I've got guts, which I don't necessarily do. I want to pick, against the lows at 2200, right? So either I want to pick against lows that either give you a false breakdown and then they reverse, or what I want to do is I want to pick against pivot resistance points. And so if I pull up, let's see, Google on my 5 minute basis, the 5 minute will show you that Google is just failing at this inflection point from 945. So you can call it 2250 if you want to give it a round number. Essentially, like as long as it's below this 2250 level, you're gonna find people that got caught in it and want to be made whole. In this case, it's 2240 on the daily, which was, the pivot, or the 5 hour, right? So you can go through them one by one, and we're going to find that a lot of these names across the board unanimously are going to have the same problem. So here's NVIDIA. You got the 5 hour, again, acting the same kind of thing as resistance. You have Microsoft. Microsoft, this is about as clear and clean of a bear flag textbook as you're going to get. And basically, it's just waiting for that next sell program to come through. Maybe if it breaks, if it rejects this 5 hour, but if it breaks out, and this is why I don't like to get ahead of them. That's why I keep repeating. You want to see what the close is like. You want to see what you want to see what the margin call situation is like, because you have the opposite now is true, right? So if you get a situation where you start to have relief, and it could be, it could be today, it could be next week, it could be 10 days from now. I'm not telling you when it will be. The disparity between this 5 hour and this 20 hour comes out to about 4%. So it tells you on a very short term hourly moving average basis and an intermediate moving average basis, you've got a very wide range to get through. And essentially, like if you're one of these people that doesn't want to wait for that, then if you pick a bottom against 254 right here, right? If you pick a bottom against 254, you give yourself $2 of a range to kind of scalp. And then if and when it were to break out above the 5 hour, now you can kind of move up your stop, set it higher, whatever. But I don't like to play that game. That's not my game. It's not my thing. It's much easier to kind of go with the flow, and to watch the rejections as long as they keep rejecting. And if we just kind of go through them one by one, Tesla, I did it. I mentioned it to you as it was happening. I think it's this one. Yeah, I mentioned it to you. Nope, is it this one? Nope, that's Google. It's this one. I mentioned to you as it was happening, you see you get above these Bollingers and they ride the top, but then you get to this, hourly or inflection point at 700, a daily and hourly inflection, and it just kind of gets heavy. And so, in this instance, I wish I could kind of go backwards, but in this instance, it got to 698 and then faded pretty quickly. Let me do it on a 5 minute, show it a little bit easier. You get to this 698, find resistance on that 5 hour, and then it fades $10. And so with a stock like Tesla, $10 is going to really destroy that premium, especially where the premium's sitting right now. It's been kind of difficult to kind of go through across the board, but you basically want it to prove itself out. If you do Tesla's the same kind of concept. If it proves itself out, I don't think it will, but over the next coming days, if it proves itself out, you've got 2% to the 100 hour, and you've got 4% back to 722, right? 375, 3.75%, but call it 4, whatever. So you get these wide ranges once you actually get the conviction. It actually kind of proves to you what it is that it's doing. Secondarily, if you just kind of go across the board, like, where's your leadership, right? If I just kind of go through my list and I sort by like what's actually winning and what's actually not. Hold on, I'm gonna share my list real quick, sorted, just so you guys get an idea. You don't really have much in the way of leadership outside of like gold, which we highlighted really early in the day, right? So you get like Beyond Meat, you get GameStop, you get like Baba Baidu, which are flat. And then outside of that, there's really nothing. It's literally just GDX, NEM, miners, and derivatives of gold, which is just safety. And if I go, even, it's not on my list, on this list that I'm watching, but if I go even further, you'll see like XLP is flat, and you'll see that like XLU is down marginally, I think like down 0.4% or something like that. But XLP, I did notice earlier was going green or getting close to green. So you get these moments where you have these stocks that are, dislocated from the overall market. Like GameStop, it could be a random day, it could be green, it could be red. I don't have an edge for you there. It moves kind of like a mind of its own. Beyond Meat, same kind of thing. And furthermore, those names are just so small on a relative basis that that them being green doesn't even matter, right? It matters from the perspective of like trying to find something that you can possibly trade, but it doesn't matter in the grand scheme of things. Now, if I flip this comment and I show the opposite, what's getting beaten up? It's all of your favorite tech names, right? So it's Roku, Dash, Snow, Adobe, Twilio, Shopify, Spotify, across the board, Coin, PayPal, TTD, Amazon, across the board. Like, so it's very obvious what is still weak, which is tech, and it's very obvious what isn't, and that's gold. And outside of that, nothing else. Like, so even your consumer discretionary names, like as I talk, I think Dollar Tree is making a low last I checked, etc. So when you have no leadership, oil even down, oil names even down on the day. XOM was breaking 100 last I checked. So when you have these situations where you don't really have any leadership, the leaders are getting sold, baby's going out with the bathwater, you have a couple choices. You could either try to hide in like the gold safety trade, you could try to hide in like XLP, you can try to scalp against some of these things. So you can try to scalp against the retest and back up against this 5 hour, or you can kind of just like take a bigger step back and say, okay, since it broke the 5 hour, it's been like a straight shot down. So until that 5 hours is reclaimed, at the very least, the trajectory is from the upper left to the lower right. And I say that, and someone the other day told me that they had trouble understanding what that meant. Here you go. That's what that means. Upper left, lower right, right? So it's just down is the trajectory. And so until that proves out, especially on a Friday going into a weekend, you don't want to get cute. You don't want to get ahead of yourself, and you don't want to try to um, uh, try to scalp here and there over and over again, because more often than not, you're going to make a mistake. Like I said, for example, that I thought Google was a good risk reward. It should roll over, is what I said, I believe, and that was like $20 ago. So, had I taken a shot, I would have gotten killed there, and then that sets me up for a position where I might not want to take a shot here. But because I haven't, this sets up again, same kind of thing, sets up a really good opportunity. And if you're one of these people that like has been waiting and sitting around and you're waiting for an op, uh, you can start to take shots like for example, if you want to take a lotto, for example, on Google, the 2200 puts expiring today are 50 cents. So, at the time when I asked, they were going for $4. So they've lost 75% of their value. And then if you get this swoon into the end of the day, you're going to have Google come close to, if not retest, the lows. So I'm doing this in real time. I'm saying this to you in real time because I want you to see it in real time. And I want you to see how these things kind of respect, whether they're algos, whether they're people, whether they're just the names themselves. I just want you to see how they respect some of these levels. And when you lay them out, why it's important to at the very least just wait for a confirmation, whether these names, whether the Qs, for example, get down to here, let's say on Monday, they get down to this level. You know what? Let me use the other arrow. It's a lot thinner. Um, so whether the Qs get down to like this level on Monday, so they make like an incremental low at 287 and hold again, or whether they continue to make lows all the way up until the Fed next week to like 285 and then they hold, I don't know. Or whether or not they just break, I don't know. But the point I'm getting at is the moment that they do hold, so if and when they do hold, it'll be very obvious. And it's the same thing we were talking about 2 weeks ago when we said you don't want to be early, you want to be late to the party because you get a lot of room. So on the Qs themselves, you get, again, you get 3.5%, give or take. So you get from 291 to 301 if and when it reclaims the 5 hour. So why do I want to be early? Like, why do I want to scalp around $2 when I can just, ensure that I have at the very least a downside level to trade against, so I could trade against 290, and I'm risking $1 to make 10, right? So the more setups that you put yourself in situations like that to succeed, to go back to Google on the opposite side, where we're saying, it rallies into resistance, and if you've waited all day, you've had two things go your way. You've had premium come in 75%. You've got a retest of the breakdown level. So if you wait around long enough and you are disciplined enough, you'll get these opportunities to kind of try to take advantage of them. And you're saving yourself, the 2.5 hours of just sideways action. So in the case of Google, from 2206 to 2240, with stops at 2220, 1, 2, 3, 4, 5 times in between. So yeah, sure. If you want to be one of these people that trades against 2200 to the long side, sells against 2230, like sure, have a ball. But what you'll find if and when you start having larger sizes, or if and when you start having situations where you want to make more consistent returns, that's not really a recipe for success, especially with an elevated VIX at 2830. So, just wanted to show this in person, show it in real time. If you have questions or you want to see anything, like I said, you can use the bunker channel here, the text here, and just throw it at me while I'm still talking, because I'm going to shut this down shortly. So if you've got any questions, I'm going to ask maybe in here, any questions. So yeah, if you've got anything you want to throw up, so we could throw up Facebook real quick, or Meta. Meta, same kind of concept. I mentioned earlier you could try to pick pick a bottom here if you wanted to, and it was essentially against 175. But same kind of concept. Go 175, it can get you to 177.5. Sure, if you want $2, have a ball. But as long as this 5 hour keeps getting rejected, you can see very clearly rejection here, rejection here, rejection here, and this was your breakdown. So once it broke down and once it rejected, so if you just faded the first rejection, or even the second rejection, you faded the second rejection at 189, it still gave you $12. What's your favorite setup for a swing? I just explained to you what my favorite kind of setup for a swing is. My favorite setup for a swing is to continue to fade against the 5 hour. And steak dinner scalper, you're the big, and maybe it's because you're like one of the newer guys to it. You've been constantly talking about how there are bottoms being put in. These bottoms are not put in until you start to have reclaiming of larger time frames. So until this 5 hour gets reclaimed, I don't have a favorite long setup. My favorite long setup, or my favorite setup, continues to be fade against the 5 hour failures. So in this case, it would be the Qs, it would be Tesla, it would be Amazon, which isn't there yet, it would be Google, which is there and it's failing. Those are the favorite types of setups. How long do you go out when you're playing on the hourly? I trade. It depends on the name. If I trade like Tesla, or I trade like Google, I trade these names at the money at least 1 week out. So personally, I trade these names. June 17 for Google, for example, 22.35s, which are going for $50, which is unreasonable for me to be like, hey guys, buy the $50 strike, or further out. And the reason I do that is because it gives you a little bit more more of a refined risk reward. So in this case, what's the high? 22.40. So it would be about $46 would be a stop out on a 22.35 that's going for $50. So that I want to wait for these things to kind of confirm one way or the other. Now, the other thing you can do, if you don't want to bet against these things like that, you can draw little trend lines, right? So you can draw little hourly trend lines, and as soon as they get violated, let's say Monday, the impetus becomes that the violation sets up for a retest of those recent lows. So if you get a situation where Google fails this trend line, let's say it's at like 22.35 where it fails, well then you kind of give yourself a situation that says, okay, this 5 hour might be 22.40, and then my downside is 22.05 potentially. So I give myself a nice little risk reward. Now, again, all that being said, on a Friday, for you, especially steak dinner scalper, since you like to kind of go against the grain, on a Friday, if you're trying to do stuff where you're trying to bet against the grain, so I'm trying to bet that this actually starts to happen today, I don't want to go out to next week. I want to go out to this week because I want to find strikes that could potentially rally aggressively into the weekend, right? So if you're one of these people that believe you want to front run, a potential break on these things. So you're saying, if you're one of these people that says, I think we're going to break 291, and that, because premium is where it's at, because it's, the 11th hour of a Friday, you could find situations where you have strikes that are 1% to 2% that are trading sub $1. And in situations like that, if you're betting $75, $200, whatever, depending on your account size, I'm not going to be the guy that tells you not to do that. I just, again, because I like to trade more consistently, prefer to have these things prove themselves out. So the moment that they prove themselves out, the moment that I kind of look for the other way. If I'm looking for a continuation, if I'm looking for stuff that I want to potentially continue to trade, I'm going to pay attention to the GDX. I'm going to see if it can get to the 200-day today. I'm going to pay attention to Newmont. Well, in Newmont's case, a little bit more tricky because I'm not sure. But essentially, I want to see if it can get through this 150 day. And if it does, again, you have situations where doors open for 5% to the 100 day, right? So, or 4% to the 100 day. So it just becomes preference, and it becomes like how you want to do it and what you want to look for. I'm going to do one more update, and then we'll go through it and bail from there. Oh, let me do the ES. So if I go hourly, same kind of concept, right? Same kind of concept. If I want to draw out a horizontal, I mean, it's 3,900 on the ES is what's kind of support. It undercut it once, but I can go against 3,900. I can go long, but until it proves out, until I see like a committed reclamation of this 5 hour, I'm not really interested. But if you're one of these people that is, have a ball. 3,900 your level on the ES. No, I don't use RSI or MACD on those types of time frames. RSI is more of a gauge for like sentiment. So I like to use percent of stocks above their 10-day. You can go through every time a cash channel, you'll see it. Percent of stocks above their 10-day and 50-day moving averages. You can just type in that, or you can just scroll back long enough, you'll see it. Those are the types of setups those are the types of readings that I look at. And when they get extreme, so when you get like stocks above their 10-day moving average in like the teens or 20%, that's like an extreme reading. Oversold and overbought, the problem with it is it can stay oversold, it could stay overbought. There's no real way to identify when is oversold to oversold. So, you use them as like bumpers on a bowling alley, for example. You try to use them as where's the extreme range to the upside, where's the extreme range to the downside, and if I'm over aggressive one way or the other, I want to pull back. So yeah, that's essentially it. I'm gonna stop here because I gotta go pay attention to the last hour. But here's your setup, your reset. Just to kind of give it to you one more time. You got a downtrend. We broke out of the downtrend. We retested the downtrend. And now we're struggling between that retest and the 5 hour. Next week, you have the Fed, you have OPEX, and you have QT all happening basically on the same day. If you can get, a big if you can get through that and no further damage happens on the back of that, then you could have yourself a situation where you see a potential relief rally. But my opinion is, even if you were to get a rally between now and then, call it back to 300 on the Qs, you're going to probably see sellers who got caught off sides in the last couple of days step in at or around that 300 level and kind of like book their gains. So I'm going to go now. I'm going to pay attention. If you got questions, just ask me. Thanks, guys.